Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for Monday, November 12th. Sellers took the day. There's no doubt about that, as we kind of started selling early, and it just kind of continued to snowball. Most things were down. The dollar did break out, so it wasn't all down, but we saw a lot of downward pressure in crude. Surprise, surprise. We saw more downward movement in our metals, which, of course, broke last week. And, of course, broadly speaking, led by tech, we saw a fair amount of selling in the overall market. So we'll have to see how that is impacting our charts. We're seeing one pattern kind of regularly in several of our areas, so we'll have to see what we think of that. So quickly, just looking ahead to tomorrow's earnings report, we have nothing coming out in the S&P 500 here tonight with earnings. And tomorrow morning before the open, just a handful. Home Depot, that's the big one, but also Advanced Auto Parts and Tyson Foods reporting earnings here tomorrow before the open. So, I mean, this is kind of what a normal day is going to look like now until we get, back into January. For the most part, we are through earnings season. Always want to be on the lookout for those stragglers, is what I call them. You can call them whatever you like, but I always like to look out for the guys that have those weird schedules, So taking a look at our overall market, like I said, I mean, it was ugly. It really was. And I had to step away for a few hours. I left a little bit after the halftime report today, and then I popped up home. I got home about 2 right as the market was closing, and I said, "Oh wow!" It just kept selling. So one thing that we're seeing it on the S&P, and we're seeing it on a lot of the different sector charts too, is this pattern. Now we rewind back to last week. We had smashed into resistance on the S&P 500. We had dojied on it Thursday, saw some downward movement. So I don't think anybody's terribly surprised that we sold off at that resistance level. Maybe we are a little surprised, by depending on you, that we sold so fast or so dramatically, if you will, off of that level. But I think a lot of us expected that to be a challenge, and I don't think we're caught off guard by that challenge. Now, the real kicker, for me at least, is this old swing low back here. We talked about a potential, reverse head and shoulders pattern last week. I don't know if it was specifically on the S&P. I know on one of the charts we were looking at, that's where I think most traders are going to be looking. How do we react at this point? If that fails, I don't really see any reason why we're not coming back to test the lows. Honestly, I really don't. Now, of course, things can change between now and then, but if I'm buying, that's why, so that's why I'm buying, is because I'm betting on that holding, or, it's convinced me that it has held. It's given me enough reason to trust that bounce, so to speak. Let's keep a very watchful eye on that. Really, I mean, again, while it was a dramatic day of selling, if this was just a little red candle, I don't think anybody would have thought much of anything. It was just not a little red candle. It was a big red candle. And really, I mean, it was kind of one of those days where it was really one-sided. It was all red, closing near the session lows. So keep an eye on that, is where my eyes will be. If we start to see some upward movement and treat it like a potential pullback, I would be open to that personally. But obviously, we're at least, a full day and plus an open away from that, right? So never going to buy on a candle that looks like that. Taking a look over at the NASDAQ, I mean, tech really got hammered today. It was definitely rough in technology, and the NASDAQ certainly illustrates that, taking out that previous swing, which briefly it did, try to fight at that area before really throwing in the towel. This is kind of a scary looking chart to me, whereas on the S&P, there's positives, right? We, from a technical point of view, there are some negatives too. But over on the NASDAQ, I mean, where do we hang our hat? I don't know where we hang our hat. The lows again? Do we come back and test those lows? Sure, we could buy at the lows, because that's been support for, at least theoretically, we could buy at the lows. There's just really nothing to hold us up technically right now. Now, again, maybe, people jump in and say, well, yesterday was crazy, tomorrow, and buyers win the day. But I do think at the bare minimum, from a bullish perspective, we've got to, I don't even know what we have to do on the NASDAQ, to be quite honest with you. I don't think it's an area that, I'm open, to both sides the vast majority of the time. But NASDAQ, I really have a hard time seeing what I need right now in the next couple of days to want to be bullish. And so this is, for me, kind of like the Russell's been. You kind of look at this from a bearish point of view and look to the Dow and the S&P more towards those bullish trades. And I might be wrong there, but that's definitely how I'm feeling as I compare these different indexes. Now, over on the Dow, we definitely sold off really quite dramatically from here. But unlike, with the NASDAQ that we saw that's kind of, doing bad things, at least if you're a bull, we really have that very similar type of pattern, although we were able to break out. I will be watching for some support to develop. We still can keep an eye on this level down here. But again, it's one of those things. If the market's going to continue to sell, I see myself, bearish on the side of the NASDAQ and the Russell type companies. If we're going to bounce, I see myself on the side of the Dow Jones, putting in a higher low on the S&P, catching that support level and showing some signals. So, that's kind of how I will be approaching the market this week personally. Obviously, stopping at the 20 is, it's a tiny victory. I guess it is something. Again, we definitely need at least, some buyers to step back up. Because again, that average is there, but our next real level of support really, you could argue it's the 200-day moving average, but I would argue it's probably the swing from back here. So I will definitely be watching to see if we can start to see some buyers step back in over there. And then in the Russell, again, it's one of those. Of course, as we were talking about it for quite a while, that 16 was a big deal. We didn't quite get up to that. But unlike other areas, we really didn't do anything. We got above some moving averages. I guess that's something, but we didn't break any levels of resistance or anything really along the way. This just looks like we put in a lower high. Textbook downward trend, very, very nasty over there. For me, at least, again, for me to get back on the bullish side of the Russell, honestly, hey, maybe a bounce at the very bottom if we see double bottom type of signals, week, 2 weeks from now. But if we see upward movement, really, I don't even know, because I could say right up here. But I wouldn't buy the pullback. I'd buy a pullback on something like the Dow. So I could say break resistance. That would technically be a buy signal, but I know 16 is such a big round number and such a major price point. So I wouldn't want to buy it there. There's no room. Breaking 16, I would like that as a buy signal. But then I have the falling 50 and the flat and starting to fall 200 looming right above me. So as has been the case for a while, I just don't see, a great bullish development in the Russell. If this is the way that we're going to move, this won't be the area that I'm focusing on from a bullish point of view. There's really not a lot. We took out about everything. Again, I'm not saying I expect it to free fall all the way back to support here, but there's no technical catalysts really, in my opinion, for it not to. There's no levels of support to prop it up. We took this out. We took out all the moving averages. We can start digging around for intraday resistance, and maybe something will develop over the next couple of days. And so we'll definitely monitor that together. So, as you can kind of see, it's pretty ugly. Again, for me, I think I've got a pretty set in, loosely set in stone. You never have a set in stone mindset, I don't think, but bearish look NASDAQ, look Russell, bullish look, broadly speaking at S&P and the Dow Jones. Those technical charts are just holding up a lot better, to me at least. Over in the materials, and this is going to be a common theme. Everything's down today, right? It was one of those days where pretty much all areas were hit, and so over on the material sector, again, this is one that I was very bearish on for a while, but it's kind of won me back over. And again, I really, much like kind of the Dow Jones, I'll be kind of looking to see if this is one of the areas that puts in that higher swing low for me to potentially think about a pullback. Now, again, honestly, I think I'm probably going to be, focusing still on things breaking resistance instead of bouncing off of support in this type of a market. That's my personal way that I like to handle markets like this as a buyer. I'd rather buy when it breaks on some momentum than try to pick the bottom, which is sometimes easy and sometimes hard. But when the volatility kicks in, it can be a little more difficult, in my opinion. At least for me, it's a little more difficult. Obviously, we can kind of keep an eye down here at this old support level as a place to catch. But I really would like to see, and again, we can always ask for what we want, right? We just can't expect to get it. I'd like to see us try to establish a little bit of a higher low. I can understand buying into it if we see something. Again, not today, not tomorrow. We haven't seen anything yet, but the problem is we do have a resistance level that's going to line up with that 50. So for me, much like I said last week, I really think that the signal would be this break of 56 up here, or approximately 56. And I'm looking for it to try to catch. And if this area continues to slide, breaking support would be something I could take a look at. But honestly, I'd probably be looking at other areas. Over in energy, that's an ugly candle. So, I mean, so many things were ugly today. But, you know, if you just forget about what today was and just think about this enormous bearish engulfing candle as we kind of ran into the top, tested the top of that old trading range, that is an ugly, ugly, ugly candle. Yuck. You know, I was thinking, you know, we've been looking at this, and I'm going to continue to respect that support level that's been support on multiple occasions, or zone maybe is a better word to describe this one on the energy sector. But if you take away belief in that support level, this, yuck. You know, I don't know how you could be on board as a bull with this chart right now, to be honest with you. I do expect it to work its way back down to test that support level. Honestly, again, if that breaks, that'd be a great signal from a bearish point of view. I wouldn't, you know, I wouldn't bet against support because I don't believe in that. But this is ugly to me, at least. This is just really, really ugly. So again, right now, you know, clearly, maybe you agree with me, maybe you don't, but we clearly have been pushed down from resistance. Our next level of support really is going to be the bottom of that range, in that, you know, just around 66 area. There is still some room to the downside, in my opinion, at least on energy, whether you really think this is an ugly bearish candle or if you just are playing with the price movement. There's really not a lot between here and that support level. Over in financials, they definitely got caught up in the selling here today. But again, here's that pattern again, where we have that support level, you know, from days gone by. That will be the area. Again, this will be one of those areas that I would like to see us, you know, create a higher low. But as long as that holds, if I were to get some buy signals above that price point in the financial sector, I would be okay with it as a bull personally. Obviously, again, we don't have that happening today with today's candlestick. But as long as we hold, you know, this support level here, if once we establish some support, whether we come all the way back down or end up creating a higher level, personally, I am open to this sector. I know not everybody feels that way, and that's okay. That's what's great about trading. But I would be okay with it. And with a deeper pullback, I would even be, you know, potentially, again, I'm broadly speaking, going to be looking at breakouts, but at least theoretically, I would be open to some pullbacks if we have some room between, you know, support and resistance. Of course, resistance being up here, that 50-day moving average is where I would call it. Industrials was one of those areas that I did think was the best set up for bearish plays late last week. And while everything dropped today, they certainly didn't disappoint either. Of course, these guys, much like the Russell, they hadn't really broken anything. They rallied with the market. They didn't break resistance like we saw in other areas. They kind of smashed into the old support level, and then, you know, basically dojied and pushed down. This continues to be pretty bearish. Now, we know we've got this history, so let's keep an eye on this history because that has been very important for us in the past, and we're going to be testing that soon. But if that falters, again, kind of like oil, if that falters, where's the technical reason to buy it? You know, and again, one very possibly develops before we get to these lows. But as of today, where is it? I don't see it, at least. So I do think we want to keep an eye and respect that price point because we've seen that history on multiple occasions. But if that breaks, I would expect more downward movement. And if it holds well, again, I'm going to be picky. There are areas that I'm going to be open to buying into on a pullback, and there's areas that I'm not. And you don't have to agree with my areas, but I would hope that you're always picky about what you're trading. Over in tech, of course, we saw what happened to the NASDAQ, and we are not surprised at all with tech. And this is kind of what happens when there's no technical reason. We saw it kind of bounce off of that little short-term trend line. We looked at that on the hourly chart on Friday. It fell through that, and there's just, you know, this is I call space. There was just nothing between this little short-term trend line that folks seem to be using and that swing low. And we actually broke that swing low on top of it. That's ugly. Again, much like the NASDAQ, I mean, this chart is just, it's rough to me. I don't think it, again, things can and very likely will develop in the weeks to come that could be places where you could buy. But honestly, right now for tech, it's above 71. So for me, at least, we'd have to break out. That's the only scenario as of today. Now, again, that might change by, Wednesday or Thursday as something new develops. But as of right now, this is one of those bearish areas, or leave it alone for me. That's how I will be approaching tech. But we're approaching, we're not too far away from those, kind of the true bodies of that support zone. And we've got a ways to go to get into the tails. Certainly, we're down, no doubt. And tech certainly can rally with the best of them if that's the way it wants to go. But keep an eye on, I would say the body here is kind of the age-old question. Do you look at the body, or do you look at the shadow or the tail or the wick, whatever you like to call it? But the first test should be the bodies of these candles down here. So we are definitely approaching that zone. Let's take a quick look at its weekly chart, see if that gives us any more clarity. And maybe I'll have to get rid of some things. If I zoom in, we can see it. If you think about this just as a chart and nothing else, if this breaks, that looks an awful lot like a bearish breakdown, right? Where we consolidated for a few candles, five or six candles, only to break. I guess it was 3 or 4 or 5 in this case, only to break. Yeah, tech, I am not on board with buying you. I really am not. I have to see it break back above resistance as of today. That's definitely what I will need. Over in Staples, they proved that they are mortal. After all, actually, they fought hard to show up in the green today. Ultimately, there's just a little too much pressure in the market, but obviously holding up very well amidst all of the selling. We know that they're on fire. They're definitely cooking on all cylinders. Had approached the resistance level, are very extended. So pullback would be healthy. In my opinion, at least for this, I'm not going to expect a deep pullback, because when things are screaming one way or another, when energy or when oil's tanking, we don't expect some deep bearish retracement, right? We might get one, but I don't think we should expect it. I think we should expect anytime sellers get a chance, they're going to sell. And just the opposite here in the Staples. As long as we're in this strong trend, why wouldn't they want to buy it at just a little bit of a cheaper price? So for me, this continues to be a bullish area. I wouldn't mind seeing it pull back a little bit more, although I don't really have strong expectations of anything other than a very moderate pullback, the type of pullback that often just lasts part of a day. So but we do continue to show a lot of strength over there overall in Staples. Utility was definitely interesting today. And there were 8 S&P utility companies that hit new highs today. So there are several utility companies that have been able to break resistance. As we look at the ETF, we've seen the utility sector fight at this price range for what it seems to be forever. I know it's not been forever, but it seems like it. But we actually have seen several S&P utility companies break out already. 8 of them hit new highs, new 52-week highs, I should say, here today. It seems like this really wants to break out, but there's always something in its way. So this continues to be an area where I'm very open to a bullish breakout. But again, I've seen way too much evidence that 55 is just tough on this, and it's got to break that before I'm ready to commit. If that means I have to miss it, that means I have to miss it, I guess. But we continue to be fairly volatile for utilities, at least in my opinion. I always think utilities should be boring. And while they haven't really gone anywhere, the last several trading days, it's not been boring in utilities. There's been a ton of movement from top to bottom as we continue to fight with that resistance level. Over in healthcare, another one of those S&P 500 type of patterns where we pulled back to resistance, predictably sold off. Our support is down here. Now, I do expect this to put in a higher low. Those are my expectations, but as long as it holds this, I am okay with buying back into that sector upon getting some buying signals. I could see someone going, bearish in it, because again, there's not a lot of reasons for it not to work back down here technically. But here we have to, contend with, people's short-term moving averages. Unlike a lot of things, we're still above that. And again, they might not be the end-all be-all. I don't necessarily think that they are, but there's something. Some people do buy off of the 9. Some people do buy off of the 20 or the 13 or the 8, whatever their short-term average is. We're above those short-term averages still in the healthcare sector. To me, that does illustrate a little bit of relative strength. I wouldn't mind it pulling back a little bit more into the 91 area, somewhere between the 9 and the 20, something like that. And I would be open to a pullback type of pattern for that there. Again, the break is going to be, very easy to watch for, to monitor for. Hey, if we break that resistance level, like we talked about last week, and one of the reasons why this is one of my favorite bullish areas right now is if we can break out, there's just not all the overhead that almost everything else, consumer staples notwithstanding, has to contend with. Everything has a bunch of resistance on top of resistance on top of resistance. And to me, at least, if we can take out this resistance level here in the healthcare sector, there's really no reason for it not to continue to show strength. So this does continue to be my favorite area for some bullish trades right now, just on the breakout, but I'm definitely watching for how this potential pullback develops over the next couple of trading days myself. But again, as long as we kind of hold this, that shows some sort of strength to me at least. So we've got a little more room that can pull all the way back down there. I kind of expect it to try to at least establish a higher low, but we'll see how that one plays out as the week unfolds. Over in discretionary, much like everything else kind of got caught up, it had held the break of its old pivot okay the last late last week to give it back here today. But again, we were able to break that resistance level. So if we can put in a higher low and establish some support here in the days to come, as long as we hold up here, that will be kind of the area that I'll be kind of looking for. Then, I could definitely be on board with taking some bullish, shots in this area once those signals start to develop. Right now, I think it's still kind of in that sell phase. Obviously, I don't think you buy this, but again, personal opinion here, you don't have to agree with it. I think there's better areas to sell. Energy looks uglier, industrials look uglier, a little more downward movement. I just don't think that this is the best area for me. Again, I'm wrong a lot, so just like everybody else. But if we can establish that higher low, there is going to be some potential room. Again, hypothetically, we doji tomorrow, and we see some upward movement on Wednesday. Well, that would be, for some people, that would be a buy signal, right? There's not a lot of room there is some actual room between support and resistance in that hypothetical scenario. So with resistance being up here at 112, we have that swing where we have that 50-day moving average. If we were to see signals at 108, there would be some upside, even if we weren't able to break through resistance. I think this one will be interesting. Plus, this is kind of one of those Santa Claus rally areas, right? At least we think it should be. If the Santa Claus rally comes, our discretionary should benefit from that. Over in real estate, really ran early, gave back most of the day's profits, still closing in the green. That's not a great looking candle, but I think we can kind of forgive it due to the nature of the market here today. I think a pullback would be nice. A pullback back into this breakout point. I'll be greedy. Pull back into this old resistance level that was tough to contend with. That kind of had me backing off both sides, not really having an opinion one way or another in the real estate sector. Pull back here and test that breakout. That could be interesting. Obviously, we haven't even started selling yet. Intraday, of course, we did. But a pullback, obviously, we're starting to kind of get extended. A pullback seems like it's a logical thing. But really, again, there's not a ton. We do have little bits and pieces, but our next real major level of resistance, in my opinion, at least, is up there at 34. So there's always going to be something that was for a day or a week because of the nature of the chart. But I do think that this does overall remain an area that you can be bullish on. For me, I would like to see a pullback before I got too excited, but I'm the guy who's done nothing with it since it broke out. So take that for what you will. And lastly, over in our communication services, this one was kind of the weakest going into today, in my opinion. If we take go back in time, we had failed at resistance. We had intraday briefly broken support, showing more downward movement. Again, to me, this looks like the type of area, much like the NASDAQ. From a buying perspective, you got to break resistance way the heck up here, which means you got to turn around and get there in the first place. So for me, I do think this continues to be an area that I am open bearish, not open bullish, at least broadly speaking, until it can kind of start to show a better looking chart. We got a little bit of room before we get back down into those old support levels. Of course, these were the lows. This is a new ETF. It's only been around for a bit, so there's not a ton of history here. But failure at resistance, failure at support, hard to like that if you are a bull. So, I mean, it's kind of ugly, and you don't have to agree with my analysis. I never expect you guys to blindly listen to anything I say. I always want everybody to have their own opinion. But I hope what you do and what you've kind of learned to do with joining me here at the Market Recap is going through these sectors to kind of put together a game plan. If this, I'm open, if bull, I'm open to, healthcare. If bear, I'm open to communication services. And maybe you flip those on their head because you're seeing things differently than I am. Having that plan, what you're looking to do makes trading a lot easier. At least in my mind, it does. So that's where we find ourselves here in our sectors here today. A lot of selling. Let's see how we establish. But there's, I think we'll be seeing interesting setups, potentially both bearish and bullish this week. Those are my expectations, at least. Over in the dollar, of course, we closed at resistance, showing a lot of strength, but closing at resistance to close last week. Took that out today and really popped, as often the case. We see this a lot when stocks break. It doesn't always hold it long term, but very often when we see something break resistance, a lot of times when we see the breakout, we see a big candle or big movement, right? And certainly no exception here. We're pretty extended. I think kind of, if you're here, great, wonderful. Broadly speaking. If you're not, it's tough. We have to assume that, this 97 is our first level of support. So that's a pricey trade, buying it at 97, 70 with a stop below 97. That's a pretty expensive trade. I don't know that I would take that, but a pull back into the 97 or into these short-term averages are going to catch up. The 9's going to rise up, the 20's going to rise up. Pullback would be certainly nice. If you're in the dollar, obviously you don't want that to happen tomorrow at least. So one more day to be greedy, but a lot of strong movement over there. Where we're not seeing strong movement is in our metals. Of course, when we closed last week, we had seen that gold had closed below support, below the 50-day moving average. We talked about making sure we got the ball rolling, got that momentum. It's that second day, right? We took out those lows here early and continued to sell off. I don't see, any compelling argument to buy gold anymore, whereas, there was arguments for several weeks back through here. I don't see it. Again, for me, at the very least, we got to get back on the right side of this from a buying perspective. Potentially a support bounce could be an area to look for some, potential entry points. But again, right now, I will assume that this old resistance is going to act like resistance again, and we're going to start to work our way back down to this support level. That's how I will be treating gold until it at least gets back up here. And again, maybe it will, but that should be a challenge for it, right? We've seen the history: resistance, breakout, support. So we've seen the ton of price movement off of that area. I think it's working against gold because it's now resistance. We're even uglier in silver, in my opinion, because, we still have quite a bit of support on gold. It's a little ways away, right? It's not crystal clear on exactly what number is. It's a big zone. But in silver, we took out support, and we looked at that weekly chart. There really isn't a lot to hold us up. Let's go to a monthly chart. Maybe that'll make it a little easier because we'll go way back. But there's just not a lot to hold us up if this is a clean break. Now, we were fighting on that nice round 14. Who doesn't like a nice round number before ultimately giving up? Right now, I can't see a single bullish argument for silver, at least paper silver. I know some people will be happy to be picking up real silver at $14, but when we're talking about trading it's a product, it's a futures product, ETF product, whatever. Yuck! That's certainly a break. I think it's bearish or nothing for me, at least right now, on silver. I'll still argue that a break of 15 is a good buy signal, and while we're potentially a long ways away, and potentially it takes a long time for that to happen, we also might have a snapback rally starting tomorrow, right? None of us know the future, so I always keep in mind, hey, that would be a buy signal that I would be open to. As unlikely as I think that it is, I'm going to have to decide if I want to play it anytime soon. But I do think that 15 still is an interesting price point. But right now, if nothing else, you got to get on the right side of 14, right? But I mean, we're seeing a ton of bearish signals as we look at that chart. Natural gas continues to do what it does best, and that's just go straight up, day after day after day. It's a lot of nice upward movement in that area. I mean, it's just hot. It's not giving us a lot of opportunity. You basically have to take what you can get. Any short-term intraday break, you have to take it because we're just not getting any pullbacks. Obviously, we're very extended to the downside. There's no doubt or to the upside, I'm sorry. There's no doubt that we need a pullback, from that perspective. But if you want to bet against natural gas, sure as heck don't. That's a ton of upward movement and a ton of momentum right now behind that product. And then lastly, over in crude, of course, as crude does, it tried early. It looked like maybe we were going to finally get a green day. And then Saudi's going to think about planning to cut production. And that didn't do it like it needed any bad news to go down. We're approaching that next level. Again, we've been kind of watching it fall through level after level after level. It's kind of approaching that long-term trend line, or longer-term trend line, at least, as a potential technical catalyst. But and this swing from back here, I'd understand from a technical point of view why folks would look to buy there, but I won't be one of them. It's got a lot to prove to me before I'd be open to it. This should be a challenge, and so falling right through it, if that's what it does yet again, because it's fallen through support level after support level. Although I'd argue this is a little stronger, from at least visibly, it looks a little bit stronger than previous swings. Again, if that fails, really, I don't see anything until we get to 55, personally. So this kind of longer term trend line for me is kind of the last line of defense. If that breaks, why not? Why not fall to the next level like it's been doing time and time again? So obviously for me, it's bear or bust in the crude market right now. Surprise, surprise. I am one of many feeling that way. So, I mean, it was a day, certainly I think caught, caught me. I wasn't surprised to see some selling in a lot of ways. I expected it, but I didn't necessarily expect it to sell as much as it did or as fast as it did here today. But some of the things that I was looking at from a bullish point of view, I wanted them to pull back if they weren't going to consolidate and break out. And those areas, there are certainly some areas that I think can develop still into some nice bullish retracement candidates later in the week. And there's still obviously plenty of bearish opportunities out there too. So I think it continues to be a stock picker's market, even though today was very one-sided to the bearish side, no doubt about that. Obviously, make sure you're following those trading rules and not chasing one way or the other. With that, ladies and gentlemen, that'll do the market recap for today. But as always, it's my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the YouTube channel and hit the notification bell so you can be alerted to any new videos or live streams that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter as well. If you like the market recap, it's always helpful and appreciated if you give it a thumbs up to let us know that we are on the right track. With that, ladies and gentlemen, get out of here. Happy trading, and I will see you all in the next one. Hey, thank you, Ed. Thank you, everybody. You guys have a great evening and a happy Veterans Day to you. We'll see you tomorrow.